Okay, so this is a brief podcast in the course International Finance, and he will discuss what kind of asset Bitcoin actually is. So, is it, for example, a currency, a security, a commodity, or is it something completely different? Okay, so why does this matter? Well, it matters when it comes to regulation and taxation. So, for example, in the US, there's a ton of regulation that will kick in if this would be considered a security. So, first up, is Bitcoin a currency? Well, according to the European Central Bank, Bitcoin is not a currency. And the reasoning is as follows. So it's not backed by anyone. No one entity is ultimately responsible for Bitcoin. It's not a generally accepted form of payment. The users have no legal protection. So, for example, if your platform gets hacked and you have Bitcoin on the platform and you lose all your Bitcoins, then you have no legal protection. It's also not a store of value because it's too volatile. So we've seen that the price of Bitcoin fluctuates a lot over time, so it's very hard to argue that it's a store of value. Okay, so is Bitcoin then a security? Well, when it comes to this point, several officials from the Securities and Exchange Commission in the US, they have stated that Bitcoin is not a security. And most likely they base this on the so-called Howey test. And according to the Howey test, an investment contract exists, that is, it is a security if there is an investment of money in a common enterprise with a reasonable expectation of profit derived from the entrepreneurial or managerial efforts of others. So clearly it satisfies the first criterion here. So you can certainly invest money into Bitcoin, but it's not a common enterprise, so you don't pool your money into one common pool, and there is no one really promoting, no entity that is really promoting this and at the same time taking care of Bitcoin as an enterprise. And you can expect a profit. I mean, that's most likely why you invest in Bitcoin. But it's not going to be derived from the entrepreneurial or managerial efforts of others, but rather it's just dependent on the potential price increase of Bitcoin. So it's not that there is someone taking care of Bitcoin and managing Bitcoin in order to increase the price. So in conclusion, according to this Howey test, Bitcoin is not a security. Okay, so interestingly here, the then chairman of the SEC, Jay Clayton, stated in 2018 that cryptocurrencies are replacements for sovereign currencies. Replace the dollar, the euro, the yen with Bitcoin. And again, that type of currency is not a security. So it's interesting here that he uses the word currency when the ECB, as we saw, they do not think that Bitcoin is a currency. And also you could argue that the initial coin offerings that you have for new cryptocurrencies, they're actually quite similar to IPOs when you introduce the stocks of various firms into the market and get them listed on the stock market. And so then would then new cryptocurrencies somehow be regarded as securities. Okay, so could Bitcoin then be regarded as a commodity? Well, according to the Commodity Futures Trading Commission, Bitcoin can be regarded as a commodity, and the reasoning is that Bitcoin exchanges offer derivative contracts with Bitcoin as the underlying asset. But this is a little bit peculiar because there are securities who have derivative contracts associated with them. Right, so this reasoning is quite peculiar. And unlike other commodities, Bitcoin is not physical. And if you compare it also to other commodities, we do not actually know the total supply of gold, for example. We don't know how much gold is hidden under the ground. But with Bitcoin, we know the maximum supply, and there's a maximum number of Bitcoins that can be released. So if you think this was confusing, let me give you a little reminder on credit cards. Right, so in the beginning of their existence, there was no legislation regarding credit cards, and they were then mass mailed to various bank customers. But then in 1970, a law was introduced in the US which outlawed the mass mailing of credit cards. But at that time, about 100 million credit cards had already been dropped into the US population. So this is yet another example in which legislation is one or two steps behind financial innovation. Okay, so in order to conclude, it is indeed hard to fit Bitcoin into any of the traditional asset classes. And probably we would need to consider a new asset class, namely cryptocurrencies. And this asset class would then not be the same as currencies. And then we'd also have to develop some new legislation regarding cryptocurrencies. But since it takes time to develop new legislation and get it approved, authorities try to fit Bitcoin, at least temporarily, into the traditional asset class of commodities. But as we saw, this is quite problematic. And generally we find that legislation is usually one or two steps behind financial innovation, and I gave you the example of credit cards